A historic day for the UK, but as it starts, we understand that the very thing that the UK wanted to try and achieve, which was a discussion about trade and the divorce proceedings, probably won't happen. We understand that Donald Tusk may well give guidelines to Barnier where he can talk about the divorce terms, but not the trade relationship. It doesn't bode well. There's a real unanimity in Europe in terms of they driving the agenda, not her.
Yeah, it seems the case that when you break down, what the next steps are, that actually the discussion, the negotiation about trades won't be coming until probably about 12 months' time. First, we need to talk about the exit deal and settling the accounts with the EU. Then the next stage is probably going to be talking about securing the rights of EU citizens within the UK and UK citizens in the EU. Then we'll probably get on to the trade negotiations.
Michael, it's Anna here in Westminster. Good to see you. What are the chances that we don't even make it onto trade within the 2-year time horizon, or the 1.5 years when you factor in the ratification processes that need to take place? What are the chances that we don't even get on to that subject and we spend the whole time talking divorce?
I think it's unlikely that you spend the whole time talking divorce because Theresa May will want to move on with those negotiations so that they can get on with the bulk of the negotiations. But when you look at that bulk, the likelihood of having it completed by the end of that 2-year deadline seems very unlikely to us. So we think that a transitional deal is very likely.
Let's talk about markets. I showed the Brexit riskometer at the start. We talked about cable, we talked about sterling, we talked about euro sterling and dollar sterling. This is the Brexit-ometer. This is how we feel. This is the BI model that we've created. And it shows that syncopation between the value of sterling and actually how we feel as an economy. That relationship has been breaking down for quite some time. Give me your worst-case scenario on sterling in the next 12 months, and give me what causes the bid to the upside. What causes a hectic rally and short-covering rally in sterling?
Yeah, really good question, Matt. So we've done a lot of modelling of currencies at BNP Paribas, and what we find is that if we put the worst case scenario into our models, the level we get for cable comes in around about 113. So what that is suggesting is that there's a lot of bad news priced into the pound, but not quite all of the bad news. So there is some scope, if the negotiations do turn out to be very tough, for the pound to lose more value. On the flip side, there does seem to be...
Michael, how do you... Yeah, so you tell me the flip side, and let me throw in this other question then. How do you overlay on top of that the performance of the UK economy and what the Bank of England does? I mean, Bloomberg Intelligence assuming that the Bank of England stays on hold for 2 years through this whole process. Would that seem like a fair assumption?
Yes, that's a very good point. So you have this disparity where the UK economy is doing very well. Actually, if you just look around the globe, the UK looks most like the US in terms of having a tight labour market and narrow output gap. The way that we think investors should position for this is not in sterling, because sterling is impacted a lot by sentiment. We think the better opportunity is in gilts. Gilt yields are currently too low given the state of the UK economy. So what this means is that if negotiations do go smoothly, or if they do become what we think of as repetitive, that is, they make slow progress, there isn't any substantial bad news, but at the same side there isn't substantial progress, there's room for bond yields, we think, to rise. So we like outright positions, short positions in gilts.
I read a piece from McCafferty from the Bank of England was on the radio yesterday, on BBC Radio, and this is what he had to say. Have a look at this quote. It's more like a slow motion slowdown. So growth becomes anemic rather than anything like a sharp recession at this stage. This is the most prescient risk, isn't it? A slow demise, a sort of a mithering of investment optimism.
Yeah, this would be quite key, I think, for the capital account of the UK, which has been very important over the last 5 years or so. In 2016, capital inflows into the UK stood at about 15% of GDP. That, from an international comparison, is huge. And if you do get this erosion to investor confidence, then you could see some of these inflows into the UK be demised. And that is something which is also probably a threat to the pound.